Greetings, everyone. I'm David Darst, here to give you a recap of the month of October. A lot of the important developments affecting financial markets took place towards the end of the month. Let's start with, and by the way, the government shutdown in the United States is continuing. It's run the full month of October, as you know. The Federal Open Market Committee meeting of the U.S. Federal Reserve met in late October and decided to lower interest rates by 25 basis points. It's now the policy rate 3.75 to 4%. Chair Powell, in his press conference afterwards, said it's not a foregone conclusion. It's not a done deal that there will be a cut in December. So markets basically rallied, and then they sold off a little bit. Interest rates rose a little bit based on that commentary. There were two dissents. One person did not want to cut interest rates, and one actually wanted to cut interest rates by 50 basis points. You had the ending of this qualitative tightening. That means it's a bit stimulative. It's a bit adding to the monetary policy part of the equation. Then you had, of course, the meeting between President Trump and Xi Jinping of China and South Korea. They decided to delay the technology export controls. They're going to resume soybean purchases, that is China. They're going to suspend the portfolio fees for Chinese ships, basically restoring things back to the status quo that prevailed in May. And finally, of course, the rare earth metals, they're going to suspend for a year China's restrictions on the export of rare earth metals. You had Apple and Amazon. These were big points of the month. Apple and Amazon were giving very positive updates on their quarterly earnings, whereas Meta and Microsoft, markets did not like the big spending plans that they both have announced. When you cut through all of this, the S&P 500 was up 2.3%. Technology was up 6.7%. Healthcare was up 3.7%. You're beginning to get a bid there. And financials were down 2.8%. NASDAQ is up 23% for the year. It was up 4.7% for the month. Europe is up 11.5%. The currency is against the dollar. And the European equity index is up 12.7%. Japan had a big month. Japan is now up 31%. And the yen is up about 2% against the dollar. China is up 18.5%. Gold up 3.7% for the month. It closed at $39.82, and as you may know, it spent some time during the month over $4,000 per troy ounce. Gold up 51.5%. The gold mining shares up 130%. Silver is up 66%. Oil was down 2.2% in the month of October. It's down 15% for the year. It's closed West Texas Intermediate at $60.98 per share, per barrel, down 2.2% for the month. The two-year Treasury basically was, for the month, was unchanged. The last week of the month, it went up 12 basis points on that Fed meeting reaction. And the 10-year was up 9 basis points based on the more outlook for the inflation. It remains sticky, and it was down 5 basis points for the month. The 2-year closed at 3.60. The 10-year closed at 4.11. So you have inflation that's basically on the low side in China. It's low and falling, but slowly in the United States, Europe, United Kingdom. Interest rates, you're seeing these gradual cuts, not everywhere. And we will see how it develops here in the December 9th meeting of the Federal Reserve. Earnings growth for the third quarter has come in very, very strong, very, very positive. Our message is alternative investments have a major role to play in markets like these. Private credit, you really want to focus on managers who can give you core middle market exposure and sector diversification. That's in private credit. Private equity, there we see the policy uncertainty does cloud the outlook for equities in general. You want to find companies that can sponsors that can manage exit activity and manage liquidity in their underlying companies and portfolio. In the private real estate, the commercial real estate sector has basically improved from the depths of its correction, and while a robust recovery does remain somewhat elusive. We wish you a great continuation of the month of November and look forward to catching up with you very soon.